FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/22/19. Well, they've been watching these gold prices. They've been much like watching paint dry, headed down, dollar up, and so much more happening in the markets. Hey, not to forget the stock market. Looks like it's peaked yet again. Is it going down? Well, our good friend Chris Vermeulen from the technicaltraders.com and thegoldandoilguy.com. He's with us now for a little bit of a market review. And Chris, welcome back as always. So we're looking, stock market looks like it's going into volatile territory. Looks like it's bouncing up against resistance. What are we seeing here?
Yeah, I mean, you look at the stock market, it looks like, we've hit a pretty significant resistance area on the market. For the broad markets, the Dow looks like a triple top. The SP 500 is poked to a nominal new high a few weeks ago or a month or so ago and has quickly pulled back. The big question is, are we going to have another downdraft like we saw more or less October, November, December? And the market, we're going to find out here real quick because we need to see some traction to the upside on the equities market over the next week or so for this pattern. And if it doesn't start to rally and move up, we are going to be heading down very quickly, and we could see a pretty quick potential 10% haircut in the market. So I am neutral on the market at this point. Equities long term, I feel very bearish, but we are still in an uptrend. And we're just at a point here, it's really tough to trade. I mean, you got to be a short-term momentum trader at this point because the market could break very quickly in either direction. And I think we could see 2,700 roughly on the SP 500 if we don't find support. If we start to slide this week, the next week down, 2,700 will be the next downside target. And that could definitely spark off some significant fear in the market, and it could actually help the commodities and other safe haven assets.
So as much as the stock markets are perhaps in a little bit of peril, the dollar has basically been the king of currencies over the past year, hasn't it?
It has. If you look at all the currencies and you take a look at the weekly chart for them and look back a year, every currency is trading lower, some of them significantly lower. The only one that's been trending up into the hard right edge is the US dollar. And it just clearly shows money is flowing out of all other countries. It's flowing into the US dollar, and it's seen as the safe haven currency. And that strength in the dollar is what is keeping pressure on most commodities and more so the precious metals. And precious metals are seen as a safe haven. And yes, money is definitely flowing into precious metals. Lots of people are buying them, but with the dollar being as strong as it is, it's really keeping the downward pressure on metals and miners and keeping any rally there very muted. I think there will be a time where we're going to see gold, silver, miners really pop and take off, but until this US dollar, I think, reaches around the 100 mark on the index, I think we're going to continue to see the metals and miners struggle at that point.
So they're struggling, and they're just in a world of hurt. We're going on our 9th year here of this, and the good thing is that a lot of not so good companies have basically disappeared off the planet. That's like a good thing, isn't it?
It is good. I mean, all bull markets and bear markets. I mean, well, the bear markets more so. They cleanse the market. They get rid of all the weak players. It cleanses the market and leaves the ones who are strong enough to survive. It means there's fewer going forward. It means that means there's the same amount of money is going to pile into fewer stocks, and that's what creates such a very strong bull market. Is that you're left with just a handful of the strongest survivors, and all the money piles into them. So, yeah, we've seen a bear market in metals for 9 years, and it's been painfully long, and it's not over yet. We're getting close. It looks like they want a bottom, but major market moves like this, the bottoms take years to unfold in some cases, and commodities can lay dormant for a very long time and then suddenly take off. So their time will come. Everything that is in favor right now will fall out of favor, and what's been a dog like metals will eventually start to shine again. It's just a matter of putting in the time and letting the markets do their thing. And I think we're getting close to that. I think we're very close, actually, to a point where the metals are going to shine. It's just the dollar here continues to be the overpowering kind of overhead resistance for metals to really pop and start to shine. But I do think we're going to see equities struggle here more, and money is going to continue to flow into these safe havens like miners and gold itself. I've noticed a lot. We've seen gold in large cap gold stocks actually perform well on the down days. And even the junior miners are underperforming the large caps some days. And what's that? That to me is saying, okay, the big money, the big funds, the big investors are moving into where they can move their big money, which are large cap gold stocks. They're not moving into the little juniors, and they're buying physical gold. So when we saw some selling last month, we saw gold move up, large cap stocks hold their ground on these big sell-off days, while junior miners sold off, silver sold off, platinum, all those other things that people think are safe havens, they all sold off. So the fact that money's rotating into these big large caps and gold itself, the true kind of safe havens, that to me is saying that big money is getting positioned for those sectors, those areas to start to outperform the equities. We've seen it happen over and over again when the stock market is on its last few legs, last few months before it really rolls over. We see the commodity sector just take off, physical assets. So I think we're close. The dollar is just a constant downward pressure on it right now, but that we're going to see a reversion here. We're going to see things reverse and take off, I think, for metals.
So be positioned in metals, and at the same time, you're calling for substantially lower prices as far as petroleum and oil and all that good stuff is concerned, huh?
Yeah, at this point, as a swing trader, I mean, looking forward a week or three from now, to me, crude oil is looking fairly weak. I talked about it this morning with subscribers. I said, the cycle analysis is pointing to a sell-off, and we could very easily see the $57, $56 per barrel. And just this afternoon or early this morning, we started to see crude really start to tank here. And I think it's going to be heading lower. But I mean, once the dollar kind of tops out, and I think commodities are going to start to firm up, I think we'll see crude oil find support down at that 57, 56 area. And then I think it's going to be pushing back up and trying to hit $68, $69 a barrel. So this is just a short-term pullback in crude. And then I think it's going to have another run and try and push to some nominal multi-month highs.
Huh, you think so, huh? So, but how long do you think it'll stay down for? Any guesses there?
I think crude. I think crude's only going to pull back here for a week or three. I think it's just consolidating. It's had a really nice run from $43 $43 per barrel, 42, all the way up to 66. I mean, that was a pretty decent run. So I think it's got some time to consolidate. It could just be a really quick pullback. The quicker it hits $56, $57 per barrel, the quicker the bounce should be off it. It's kind of the way momentum works. So the big question is it going to drop in the next few days, hit those levels and rebound and continue to rally up to 68? Or is it going to flag out and trade sideways and build kind of a launch pad over the next 2 or 3 weeks? So I overall, I'm still more or less bullish. I think crude's going to hold up and try and push back up into that 68, get back up to that 72 area. But I'm only looking for a pullback here over the next week and a half.
Mm-hmm. So a short-term pullback for crude, and interesting. So I guess we'll have to let the market tell us. So interest rates, we looking higher or lower? What do you think?
I don't follow the rates too closely. I mean, the Fed and all those guys, I just almost ignore them. I mean, I think rates have more or less topped out. I can't really see them getting pushed up too much. So I feel as though things for rates are kind of stretched to the limits. Maybe there'll be a little rate hike, but I think that would be like a dagger in the markets. So I don't know what to think about interest rates. My gut says they're kind of done going up. I think if anything, it'll just be like leave the same. And as the markets start to fall later this year, I think they'll start cutting rates. But overall, I'm kind of neutral. I don't really know which way they're going to move them.
So you're agnostic on rates, huh?
Yeah, I don't follow the Fed and all that manipulated stuff. None of what they do makes much sense to me, so I just ignore it.
Hey, keep it simple, right?
Yeah.
So, but any other markets you're following that we should take a look at?
Really, I think to me, the kind of exciting moves here, I think, are just the pullback in crude oil. I think the dollar is going to push up to 99. So, I mean, a long dollar kind of play. Gold, metal, silver, the metals in general, I do have a cycle low for them this week. So I feel as though they're on the verge of having a pop and moving. The only problem is this dollar continues to put the downward pressure. So there's nothing too significant. The biggest play that really I've done in the last couple of days, the last week or so, has been just shorting the VIX. I think we're close to another VIX spike. We just closed out a short VIX play this morning for 24%. And I think it's about to spike again if the equities market rolls over, create another great opportunity. So it really is coming down to which way the stock market is going to break over the next 4 or 5 sessions. If it pops and rallies, we're going to see metals probably continue to move down. We're going to be able to look for some new long stock trades in various sectors. If equities break down, it's going to create a great opportunity for, I think, the safe havens, utilities, miners, and eventually to do another VIX type of trade as well, because when the VIX spikes, there's all kinds of opportunities. So we're kind of in limbo right now. We've been holding the same positions for about a week, and we're just letting the market decide which way it wants to go before we adjust things.
Hey, so about the VIX, I find what's interesting about it is that often, usually when it spikes, that spike lasts for a very short period of time, doesn't it?
It does. And, there's a great way to trade the VIX, which is I prefer the UVXY. It's a 3 times, it's a leveraged VIX trade.
VIX. Oof.
and the nice thing about it is if you zoom back in time, it always loses value. The way it is built, it just loses value. They constantly are reverse stock splitting. So the theory behind it is it moves extremely fast. The key is you trade just enough money that if it goes 50 or even 100% against your position, you're not going to freak out. So you bet 1,000, you bet 2,000, 3,000, whatever you're comfortable with, because it could have some spike if we have a massive collapse and it could, jump 50 or 80%. But as long as you can hold on to it long enough, it will fade back down. And actually, I always like to do a small position, and then if it spikes even more, you can add to it. And the problem with this is you have to short it, which is the safest play for trading VIX, because you don't want to trade an inverse VIX ETF, because if it spikes like 100%, that fund goes bankrupt overnight. It happened last year. So the problem is trying to short the VIX. Some brokers don't allow you to short it, and the VIX only has a certain amount of shares that can be shorted every day. So you kind of get squeezed into jumping into it when you shorting it when you might want to wait a little bit longer. But it's a little bit of an art. But the reality is you just have to short into these big spikes and just sit back and let it fade over time.
Yeah, but obviously it's not for the faint of heart, right?
No, this is for an active trader, somebody who likes fast moving things. But to me, this is one of them. Actually, to me, it's one of the safest plays. It's one of my favorite types of trades because it's naturally going to lose value. So even if it goes against you for several months, it should naturally lose its value over time. So it's kind of like an option. Really, you just have to give it time, and it'll pan out. It loses theta, time value, contango, whatever you want to call it for this type of contract. Yeah. And so it is a fast mover, but I mean, it's a very consistent type of trade.
Yeah, you have the time decay, right? On the whatever they're doing, the options, or I don't know, it's a major time decay, and it quickly, when it hits that spike, it quickly retraces, right? I mean, that's
they're constantly rolling into different the next kind of futures contracts. So it's contango. Right. So it's just forward contracts have different values, and as it's rotating a bunch of the fund money every day to the next contract, it's just naturally losing value the way that the contracts are valued, which is great.
Yeah, and most people who get into the VIX don't really understand that, do they?
No. The VIX is kind of a complicated tool, and it can kill you if you don't know what you're doing. And in most cases, I mean, if you're just trying to trade it normally by going long, or it'll kill you. So you've got to. To me, this ETF, this shorting a long ETF is the best way because it puts the odds in your favor because it's naturally going to fall and you're short it. So it's a unique setup. I mean, if you can read about it, go online. I mean, there should be some amazing articles that show you the opportunities of how much the VIX falls on average every quarter. Look at it quarterly because time is your friend here, and the VIX just falls 20% every quarter type thing. Yeah. I mean, and that's if you're just shorting it. That's not jumping into a spike that you have that it jumped 30%.
Yeah, and when you see it go over 20. When it does, or high teens, it's time to jump on, right?
Yeah, exactly. Yeah, for sure.
Yeah, when it does that parabolic spike, and that's the amazing thing. It's so predictable. It does that parabolic spike with pretty much almost, I wouldn't say quarterly, but whenever the market takes a hit, a major one, that VIX is taking it's going up an amazing amount. Right.
Yeah.
And it's so leveraged, especially triple leveraged VIX. I mean, I can't even imagine that one. Right.
But they say that, but it's really not. I mean, you don't really get the full leverage.
No.
They're not built properly. I mean, I would say they're built perfectly to short, but they're not built properly to follow the VIX. But the nice thing about the VIX is it's based off fear. And when fear hits, you get that parabolic spike, 2 or 3 days, just goes completely straight up. And it gives you a great opportunity because the VIX will fall even before the stock market bottoms. And you can use that signal to help time yourself getting into other trades. And we did this on the last spike that we saw here in early May. We did some short trades, some long trades. We got the VIX. I mean, it was just awesome trading the SP 500. I think we did 4 or 5 trades within a 5-day window, and I mean they were all winners. And we just completely played the volatility. It was awesome. So it definitely takes you got to be watching the markets closely for something like that. But
you don't set it and forget it.
No.
You got to be on top of it, on top of that trade, or it's going to take you out.
Yep.
Yeah. So, all right. Hey, what was the name of that triple leverage?
UVXY.
UVXY. Hey, you just got to remember the alphabet, and you got it.
Yeah.
All right. Hey, so look forward to gold. We're getting closer and closer to the end of the year. That's where we usually have the gold market spike up. precious metals. We'll see 70% of the time, December, January. But in the meantime, it's going to be interesting to see where we go from here. Hey, so we find you at thegoldenoilguy.com. Just tell us what will present to us when we go there.
Sure. Yeah. Well, every morning for subscribers, I do a little 5 to 12 minute video. I recap on the equities markets. I cover gold, oil, silver, miners, Bitcoin, the indexes, bonds. I quickly go over the daily and sometimes intraday charts, and I just show you what happened yesterday, what's happening today, how it'll affect our positions, and what I'm expecting. And I show my cycle analysis of the bias of where price should be heading over the next few days. And I really just kind of walk through the markets every day and update. And anytime I find a trade that I'm taking, I send it out to subscribers, and we all trade ETFs and stocks together. It's pretty straightforward. You just watch the video around 9 o'clock every morning, and you're set for the day, and wait for a SMS message for a trade alert.
All right. Very cool. Hey, so you text the messages out for trading alerts. Very cool. Hey, we always have a link to it. It's in the show notes to this interview on financialsurvivalnetwork.com. Please sign up for our newsletter, the Twitter feeds at Kerry Lutz, Facebook page, Financial Survival Network. Hey, regardless how you're listening to the show, please subscribe, like, and share it. Really helps us a lot when you do that, and helps us get the message out and present ideas like Chris's to you, which you're just not going to find every place. And on that note, Chris, thanks for being on. We will talk to you again real soon.
All right. Thanks, Kerry. Always a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.